Let's now balance off all the accounts that we have posted from the journal entry. You need to understand that if those accounts are among the items in statement of financial position, for example, assets, liabilities, and equity, you will have balance, and it is either opening balance, balance brought down, or closing balance, balance carried down. But for items like revenue and expenses, there will be no balance at the end of the month because all will now be charged to statement of profit or loss. Let's do it. Let's start with cash account. You need to first find out the total for both sides, debits and credits. So the total that will have the higher amount will be the one that we will record. On the left, we have 21,200. And then for the credit side, we have lesser than that. So let's do and calculate. Write the higher total. And we understand that both sides must be equal, so we will need a balancing figure on the right side to make sure that the total is really 21,200. So we'll take the calculator, calculate the whole amount, 2,900 plus 1,500. That will be 4,400 minus 21,200. You will get 16,800. So that's your balancing figure, and we call it balance carried down. If you were to open and continue recording in the next period, meaning June 1st, you will be sending it to the opposite side and put it as balance brought down. 16,800. And now you see that this balance for cash is a debit balance, which is the normal entry for all assets. Let's try and close the next account, supplies. Since there's only one transaction, 2,500, we can just draw two lines and put 31st, the last date of the period, and put as balance carried down because it's an asset, 2,500. So sometimes the question wanted you to open back in the next period. So we can do that. June 1st, balance brought down 2,500. So it has a debit balance. Next, ready supplies account. We need to close the account as well. So let's total up both sides, and it looks like the right side here is having a higher total. So we will write it down as the total for both sides. And obviously, we need a balancing figure on the left side here and put it as closing balance, where we need another 1,000. And if you continue recording in the next period, we'll be sending this to the other side because it has a credit balance. Liability has a credit balance. Karim and Partners, since there's only one transaction, we can put two lines showing that we are closing it. The date, 31st, balance carried down, amount 3,200. And if you open back in the next period, your opening balance will be on the debit side. Then, what about rent expense? Rent expense is one of the items that you will charge to statement of profit or loss. So it will not have any balance at the end of the period because all will be charged to statement of profit or loss. Then, what about service revenue? Similar, since this is also another item that you will charge to statement of profit or loss, it will not have any balance. So let's total up both sides. 6,700 total revenue. And we need a balancing figure on the left side. That's your, that will be statement of profit or loss because you don't have any balance, and you send the whole amount to your statement of profit or loss. Salary expense, also the same thing. Because it's an expense, so there's no balance. We have two more items that we need to close here. Capital. It's equity item. So it will have the closing balance. And if you open back in June, it will have an opening balance of 20,000. It's always credit. And then the last one is city company. The total is 3,500. The higher amount will be the one that we record both sides. And we need a balancing figure on this side. So we need another 2,300. And we open back. If you want to continue in the next period, we will have an opening balance, 2,300. Done. So with this information, we can now prepare our trial balance. So trial balance is just a list of all your account balances. This is the title. So we will record all the transactions accordingly, whether it has a credit balance or a debit balance. So in the first case, we have cash account, balance of 16,800 on the credit side. Next, we have capital. We have also credit balance. Sorry. It's an asset. So it has a debit balance. Capital has a credit balance. City company, AR, an asset, will have a debit balance, 2,300. And let's check on the rest. We have supplies. $2,500. Ready supply, which is your account payable. We still owe them 1,000. Allen and Partners, account receivable. They still owe us 3,200 because there's no payment yet. Salary expense for the secretary, 2,000. And let's check. We have two more: rent expense and service revenue, 900 and 6,700. Service revenue. So with that, we can total up both sides and see whether we have done the right thing. 27,700. And calculate the total of the debit side. And you'll see that, yep, we have exactly the same, 27,700. So with that, we can see that what we have done so far is correct because the total of the trial balance is equal. How sure are we? We can say that it's almost 99% of what we did from the journal entry, posting to the ledger, and preparing the trial balance after you have balance of all the account is correct. There are still chances that something is wrong and it cannot be detected using the trial balance. That's all.